You're
Hey everybody, sure hope you all are doing well through this odd and crazy time. For those of you who joined us at our April 15th Zoom client call, and for those who didn't join us, we just thought it'd be a good idea to provide some updates. There's been a lot of information that has come out over the last couple of weeks. So we wanted to provide some updates that might help our clients to navigate all that's going on these days. And also to just summarize for those of you who hadn't been able to join us. And again, I just want to re-emphasize, we are here and available. We're working. Please call us. Please email us. If you've got any questions on this, any way we can help you with this tax information, business things, any way we can help you. We are so grateful for our clients and especially in this time, we want to be able to help in any way we can. So we're gonna just quickly go over some information. Some of this will be a repeat from what we did on April 15th, but also there'll be some new updates. And again, I would also just remind people, if you want more information about this, go to our website under the blog area, our website at ntcpas.com. We've got a lot of articles on all this stuff, but we are glad to pick up the phone and answer questions about this. So we're going to be going over some quick topics on business issues, as well as just some individual tax issues. So with that, we'll move on to talking about new legislation. And I think Steve has a little more information on this, but this bill passed yesterday to basically bolster the funding of the SBA loan programs that we talked about before.
Yeah, so this is fun, right, Paul? We're in our home offices. We get to see a little bit behind the curtain a little bit. So
yeah, a lot of fun. Hopefully my dog doesn't start barking in the background.
So we are, at our home offices, self-quarantining as well. But just want to give you an update on the new legislation that came out that was passed yesterday by the House. Essentially, it's just it's just more money that's been approved. No really major changes that have gone on that's going to impact people other than, hey, we've got $484 billion more of stimulus money that was passed, $310 billion that is been added to that PPP loan. So if you didn't get approval on the PPP loan the first time, now is the time to contact your bank to get back out there and to try to see if you're able to access a loan this time around. So there's $310 billion more that is available. They also passed an additional $50 billion for some disaster lending, and then some other kind of grants, testing money, some money for states and localities as well. So really just the bill was just, hey, we need more funding that's going to be out there. And the main part of this is that PPP loan.
Yeah, that's going to be welcome for a lot of businesses out there. I'm sure everybody's seen in the news, a lot of small businesses were unable to get loans under that first round of funding. So just as a refresher, there are two loans that were created by the CARES Act to help small businesses. The PPP loan is the one that essentially provides for a grant for small businesses. And it's basically initially a loan, and the proceeds from that loan are able to be used over the 8-week period after the loan is funded to pay for employees to keep them on payroll. Essentially, the government wants employers to pay their employees, even if their business is not working right now. It's better to have employees paid than to have them collecting unemployment. The PPP loan is administered by banks. It's what we've heard is that the big banks are the more difficult place to get funding on these. There's been a lot of stuff in the news about the big banks funding big companies instead of small companies. So 2 tips for this. One is if you've got a relationship with a community bank, reach out to a community bank. We can introduce you to a community bank as well. Also, there are what's known as fintech lenders. These are basically tech companies that are like banks. They're virtual on the internet. So one of the main ones is called Kabbage. I think that's spelled with a K, kabbage.com. And I've heard from other CPAs who have had clients who have had some success in getting lending through Kabbage. So the big advantage of these PPP loans is the loan forgiveness. Basically, at the end of the 8-week period after your funding, you can apply with your bank for forgiveness, and the banks are basically mandated through the CARES Act to forgive amounts spent during that 8-week period. It's called a covered period. So all the amounts that you spend on that a business spends on payroll, rent or lease payments, mortgage interest, utilities, those amounts are eligible to be forgiven, which basically results in a grant. Steve, I know you.
Yeah, I was gonna say, I think that what we've also found out in reading the CARES Act is that these SBA lenders, or the SBA has 60 days to determine that forgiveness amount. I remember when I was first looking at this, I thought they're gonna get so many loans that they're not gonna be able to determine that forgiveness amount for a year maybe, and people are gonna be wondering. They actually have 60 days, it's written in the CARES Act, to determine the amount that will be forgiven. And then also just kind of learned in the last week that self-employed individuals and partners, they also qualify to receive that PPP funding amount. So, keep that in mind for any partners in partnerships, yes.
I think it's worth discussing really quickly. Steve and I have been talking about this a lot. I've spoken with some other colleagues. There's a lot of businesses, again, it's in the news that a lot of businesses that don't necessarily need these funds are getting these PPP loans. It's an interesting dilemma because I think there are a lot of businesses who may not experience a downturn in business right now, but will be experiencing a downturn in business in 6 months from now.
Yeah.
And it's just really, it's an interesting issue in that a business has to certify that they are or will be anticipating experiencing an economic slowdown that requires them or necessitates these funds to help them keep their employees employed and their business going. So it's an interesting dilemma for businesses that maybe aren't serving the public and immediately shut down, and yet they anticipate that there's going to be a problem. I don't know, Steve. I don't know if you have something else to add to that.
No, I think that, no, definitely. Most clients, they have, that work in process right now. It's just so they're not going to be able to get any new contracts, I think, in the next 8 weeks. And that'll be difficult. One thing that I think we also talked about is kind of best practices would be to put that money, because they're going to have to justify the fact that this money was used for payroll, was used for rent, and to maybe put that into a separate account and then, draw on that money at, in equal sums to what the payroll that you are funding or paying out in that particular pay period. That way you can show that it traces from one account to another and you actually did use that for payroll.
So again, that PPP loan seems to be the best, largest solution for businesses and employers that are hurting right now. Other tax incentives that were put into place in the CARES Act a couple weeks ago, the ability to carry back net operating losses. This is something we will do for our clients when we see it on a return. So losses that were incurred in 2018, 19, or 20, you can actually go back and get taxes back that were paid in previous years. It's basically through filing an amended return or filing a form, and the check comes later. And then, go ahead. Do you want to say
I'll
something?
say it. Yeah, and then we also found out that there was that technical correction that there's 100% bonus depreciation on qualified improvement property, which is property improvements to a property on the interior of a building of commercial property, not rental or residential property. The thing that we found out about that was you can correct this in one of two ways. If you haven't filed a 19 return, you can go back and amend 18. Amend that return, send out new K1s. Of course, partners are going to have to then file amended returns, or you can file what's called a 3115 form, and then that change can be reflected on the 19 return. So I think you have to kind of evaluate, you know, do you want to go back and amend 18, or would you want to just include it on 19 or going forward, depending upon how you file the 3115.
Yeah, I know we were glad to get that clarification because we were concerned about how we would apply this to partnerships, that maybe, you know, a partnership has 15 partners. Were we going to have to amend that partnership return, and all 15 partners would have to amend their return. So we'll help our clients kind of navigate the way to take advantage of that.
For sure. And then I think, you know, payroll tax deferrals, you know, so what we found out obviously in this particular section is that the employer portion of Social Security, you can defer that and pay 50% of it in December of 2021, and then the other 50% December of 2022. What we were unclear on is it's very specific that if you have a PPP loan, then you can't participate in some of these employer credits. And it also mentions the payroll tax deferrals, but there was a frequently asked question that came out, and the IRS said, yes, you can defer your payroll taxes up until the point that the PPP loan amount has been forgiven, at which point you cannot defer any further. The amount that has been deferred, you still can pay that back in 21 and 22. You just can't defer any more. That just came out really recently.
Got it. Just want to reiterate, if you do take advantage of this, please keep track of this. Just don't want our clients to be in a position where they owe payroll taxes and they forgot about it. The penalties for payroll taxes are stiff. So just keep track of that if you do take advantage of this.
For sure. Want to give some individual updates as well. You know, many of you have heard, you know, and if you haven't, that's surprising, but you know, the due date was moved from April 15th through July 15th now. So any balances that are due are now due on July 15th. There's no penalties, late payment penalties, late filing penalties until that July 15th due date. And California conforms to that as well.
One of the new updates to this, when this originally came out, the second quarter 2020 payment due date had not been moved from June 15th. So there was kind of some awkwardness in that most everything was pushed to July 15th, but the second quarter payment was still June 15th. That's been resolved. So at this point, everything is July 15th. Give us a call if you've got something in that time period, because you know we've got FinCEN 114 forms to report foreign accounts. There's a lot of due dates that normally are within April 15th, gift tax returns, things like that. For the most part, everything's moved back to July 15th. One other thing that I think is new since we did our April 15th talk on this too is that the time period for 1031 exchanges, if you're selling a property, the time frame to identify your replacement property and or close on the replacement property was also moved to July 15th, as long as that time period fell within that April 15th to July 15th. So if you've got a 1031 exchange in process, you've also been given some extra time there too.
For sure. So, and there's also some July 15th opportunities we wanted to continue to remind you of. We mentioned this in our previous webinar, but just a further emphasis, you have until July 15th to fund your IRA. So if you haven't funded those and you still have time, if you want to fund a deductible or non-deductible IRA, and then also those health savings account, HSAs, you can contribute money into those. Those are tax deductions, and you still have some time to be able to do that. The economic impact payment. So this is, I think, what everybody's been most interested in, which is, hey, the $1,200 economic payment. How do I get that? When am I going to get that? And so we wanted to talk through that a little bit. What is IRS going to look at to determine whether or not I qualify for that advance? So just kind of looking through the bullet points here. If you've filed your 2019 return, they're going to look at that. They're going to look at your adjusted gross income to determine if you qualify for the advance. If you haven't filed 19 yet, they're going to look at 18. And if you aren't going to file a return at all, they'll look at like your Social Security benefits. And then if you don't even file at all, there is a special section, which I'll show you on one of the next screens, that you can put your information in, and therefore you will get your $1,200 as well.
Yeah, it was pretty amazing how quickly the IRS was, given how technologically hamstringed they tend to be. It was pretty impressive at how quick the IRS was able to get this up and going.
No, and you and I were talking about this a little earlier. I mean, they have, this is their webpage. They've actually added, a coronavirus tax relief section on there with some really great information, a lot of frequently asked questions, a lot of resources. So they moved quickly. And I think it makes sense, and it's very easy to kind of navigate there. Clicking here on the Get Coronavirus Tax Relief, it's going to take you here. You can check to see where your payment is at. Click on the Get My Payment button. You'll enter some information, and then you're going to be able to find out the status of where your payment is at. If you need to update your bank account or mailing address, there are some ways that you can do some of that. And then if you're a non-filer as well, you have to enter your payment information here. This would be the section to be able to enter that in to make sure you get your $1,200 payment.
So even though they got that up and going pretty quickly, I have heard from clients some mixed results on people who tried to access this. One client in particular who it just basically said, we're unable to give you information at this time. I'm sure that they had some kind of special circumstance with their return, but I have heard some kind of mixed results on at least getting information on payments from this.
Yeah, okay, good to know. Some kind of update that they have a great frequently asked questions, and I thought I would highlight a couple of these for clients, which is, hey, I've got a dependent in 19, but they, graduated college, they're out on their own now, they're not going to be a dependent for 2020. Are they going to be able to get their payment? And the answer to that is no at this point. When they file their 2020 return, they'll be able to claim that credit and they'll get the money at that time, but they're not going to get the advanced payment because they were a dependent in 2019. Also, if you have a dependent parent, there is no credit for them. They're not going to get an advance payment either because they're a dependent of yours, so they don't qualify, and they're not a child, so they don't get the $500. If you say you closed your bank account and you want to update the IRS you can go to that Get My Payment section and enter in a new bank account number or account number. And in some instances that will work. If they're already processing your return, they're not going to be able to accept a new account. And what will happen is if that account was closed, it'll bounce, and then you're going to get a paper check in that instance. The payment's going to get direct deposited in the account shown on your tax return. So it's important, obviously, when you're filing a return to use the account that you want that money deposited into. And then the IRS is going to send out a letter. So if you didn't get your money, you filed your tax return, look for that letter. If you didn't get the letter, then I think you need to contact us, and we'll kind of see if we can help track that down and see what's going on. IRS continues to emphasize, be aware they're not going to call you, text, email, contact you on social media to try to get your personal information. Please be careful and do not let the scammers take advantage of you on this.
Yeah, anytime the IRS contacts you, if you're not sure, just give us a call. We'll help you decipher.
Just wanted to continue to show you, these are the phase outs related to your adjusted gross income to determine your qualifications to receive that advance payment. The phase out starts for married filing jointly at 150, and then it fully phases out at 198,000. So if your adjusted gross income on 19 or your 18 return is above those amounts, then you're not going to receive the advance payment. You still could qualify on 2020 when you file that return. So everything isn't lost. You still could get it at that point. You're just not going to get the advance payment related to that. And then I think that's it as far as our slides go. Paul, you have any kind of closing remarks on this?
No, we just hope everybody's well. Stay safe. Please don't hesitate to reach out to us if you've got any questions on this information or anything else that's out there.
Yeah. Sounds good. All right. Thank you all.
Thank
Bye-bye.
you.